right, let's get some analysis now and start looking at some of the predictions for this year as investors come back from their holidays, trading building up to almost full swing. Gary Booysen from Rand Swiss joins me now. Great to have you with us, Gary. So let's start in America because that's the most exciting. The Dow, do you think it will hit 20,000 today? And then what does that mean? Is this good news or is it a concern because these markets in the US may be getting too hot?
I think there's every chance that it's going to hit today. There's still a lot of optimism, and we're seeing a rally in Asia as well. So to see that feed through, yeah, it's possible. Looking at Dow 20,000, I mean, it's, largely it actually doesn't mean too much because if you look at the Dow, the way that the Dow is comprised, it's very different from let's say the S&P 500. The Dow only has 30 companies in it. It's a price-weighted index as well, which it's something that gets reported on a lot, but it actually isn't very representative of the US economy as a whole.
That's interesting because it used to represent the big blue chips. Do you mean the economy has changed, so it doesn't actually reflect the most important companies?
Yeah, I think so. If you look at it, the companies, a lot of companies in the US that are driving growth now are tech companies as well. So the Nasdaq has become a lot more important. But again, I think there's been a fragmentation, and to look at an inclusive index, you would definitely look at the S&P 500. The Dow, though, is still something that everyone watches. So it's a psychological level, and I think it's something that everyone will remember when the Dow hit 20,000, and it definitely perhaps could encourage investors to move back into the markets, especially after 2008, where you had that enormous meltdown. That markets have recovered, that these financial instruments are viable investment propositions.
There's always a debate whether the markets actually reflect what's going on in the economy, and all US markets are hitting highs, and there was good news on Friday. The dollar is up. So is it showing that the economy is stronger, or should we still be concerned about Trump and him coming in, because everybody seems to know what he'll do, but it may turn out very differently?
Yeah, I think you're exactly right to differentiate between markets and the US economy. So the US economy is actually doing fantastically well. So I mean, as you alluded to, the jobs numbers on Friday, the unemployment rate there ticked up slightly, but again, at about 4.7%, that's a frictional unemployment level. I mean, I think South Africa would be only too grateful if we could have unemployment at 4.7%. Looking at the figure, though, you saw wage price inflation starting to increase. So you've really got an economy that's starting to fire on all cylinders. You've also got US earnings season starting today, which is going to almost tie the what's happening fundamentally for the companies to their stock prices. So the expectations for US earnings now are for earnings to increase on average around 11%. So the biggest gains are expected to come in energy, with the oil price being a little bit higher. But again, an 11% rise in US earnings is significant. That's a fairly extended expectation. So any disappointment there, and you could see this rally coming to an end, which has largely been fueled, I think, just by rampant optimism that Donald Trump is going to put in incredibly expansionary fiscal policies.
What is your overall feeling? Because some are very worried about China hinting that it could retaliate if he doesn't respect the one China policy. He is going to talk this week. I think Time put it as this potential, but big risk that China could overreact, even go into a recession. Do you feel like it's still very volatile?
Yeah, absolutely, and I think it's going to be more volatile as the year goes on. I mean, if you look at the way Donald Trump, as president-elect, has been behaving, targeting specific companies, with tweets. I mean, we've obviously got the press conference that you mentioned on Wednesday, which has been highlighted as the big event of the week. But at the same time, Donald Trump has notoriously not pitched up for press conferences, cancelled at the last minute. So suddenly, as a market participant, people are trying to make logical investment decisions based on a very volatile variable. So it makes investing very difficult. It makes trying to predict future policy direction very, very difficult. And we can only hope that the international community doesn't overreact to perhaps what Donald Trump says, and starts to look at the actual policies that get put in place in the first 100 days of his presidency.
So you say it's hard to make investment decisions. What are you actually doing?
At this stage, again, it depends very much on the type of instruments that you're investing in. But for us, again, I mean, we take a portfolio approach of the market. We take a slightly longer longer term view, if you're looking at an equity investment, you should be in the market for more than 5 years. If you're buying things like IBM on a 12 PE and holding them for 10 years, Donald Trump probably won't be president in 10 years' time. I mean, the whole world is going to change, and you've got to trust the management of companies to be able to adapt to the environment surrounding them. You look at Chrysler, for example, today. Chrysler coming out with an announcement saying, oh, they're going to invest $1 billion in America. This was always part of their plan, and really preempting any sort of announcements that we've seen Donald Trump make versus someone like VW and Ford, for example. Yeah, so definitely when you're investing in stocks, when you're investing in equities and you're investing in companies, you're investing in the management teams and their ability to adapt to a changing environment. So
some would want them to stand up against Trump, but
absolutely,
I guess they have to do what's best for their company.
I think people are, and they're doing what's best, hopefully what's in the best interest of their investors, and that's essentially why you would still be investing in stocks, and why I think the market's also looking at Trump and thinking he is probably going to be business friendly towards the overall, and I mean, we've seen the rally on the back of that.
If we look at 1 year down the line, not 10, if you invested in the JSE, basically the top 40 last year, I think you lost money. So are you hoping for a better year?
Yeah, definitely. I think, what we saw last year was, I mean, we had some pretty extended valuations coming into 2016. So you looked at Woolies. Okay, Woolies, if we take it as an example, I mean, it was trading on a 30 times earnings. A little bit of that was to do with the David Jones acquisition. But over the year, that PE unwound dramatically. So it's trading on a 17. So what I think you've seen here,
so
this has happened
in layman's terms, it became cheaper.
A lot cheaper. So I mean, you've got that on Steinhoff Medical. A lot of those old blue chip companies are looking a lot cheaper. They're good quality companies that you can now collect at a fairly reasonable price, where they were looking very expensive. So from our point of view, earnings have still been increasing. Prices have been very stagnant. For me, that makes the whole market look a little bit cheaper. So our prediction on where the market should go, I mean, on average, the JSE has done around 18% since 1960 annualized. So I think what I'm trying to say is I think we're in for a good year.
That's good. I like that outcome. Retail is interesting, and I think Woolies is actually going to speak later today. Just give a quick update. There were worries years ago that with this flat economy, retailers that were too focused on the South African economy just couldn't make money. They had to diversify. So you're feeling a bit better about this sector?
And I think that's definitely been a trend within the retail sector in South Africa as well. You've had Foschini buying things like Phase 8. A lot of our retailers have started to look offshore. You look at a company like Steinhoff, which is now a multinational furniture retailer. I think it's got presence on just about every continent in the world. So yeah, the retail sector, I think the South African consumer is going to remain under pressure. But as I said, a lot of these share prices have been, have come down and re-rated accordingly, and I think maybe overreacted a little bit. So while South Africa is maybe a difficult, a difficult place for the consumer now, I think these companies are going to do okay.
What are you expecting? We're hearing US retail sales data on Friday, and we're waiting to see if people spent money in December. And as far as I can remember, every year we say nobody's got any cash, and then the figure comes through, and it's actually okay. Any expectations? Yeah,
I think what you're going to see in the figures, again, it's not so much maybe the absolute number that we'll be looking for as well. It's also the way that the numbers comprise. So you'd look at spending patterns as well, and I think what you're going to notice is that a lot of spending has now gone online as well, and that will benefit more of the online retailers and the people that have those online channels than the traditional brick and mortar.
Final question for you. Jacob Zuma, our president, yesterday saying that we could hit 2.9% economic growth this year. Do you agree with a lot of economists that's very optimistic?
I'm glad someone else is optimistic as well. Yeah, I think looking at it, our forecast is around 1.4% growth. So I mean, we are on the upper side of that. Most economists are sitting between 1 and maybe 0.9 and 1.5% growth. Anything can happen though, because we have seen a recovery in commodity prices. If that trend does continue, you might see some of the pressure coming off South Africa. I also think if you look at the drought conditions, that was perhaps more severe than most people actually gave it credit for. And with the breaking of the drought, you might see our GDP growth ticking up a little bit more than people expected.
All right, I hope you're right. Thank you very much for your time. Gary Booysen from Rand Swiss.